Okay, welcome to AutoChartist Fine-Tune Your Chart Pattern Searches with the Uniformity Indicator. Today, before we start though, we'd like to cover some of the legal work with our disclaimer so we can make everything legal and move forward. The AutoChartist service includes chart pattern identification in respect of foreign currencies, commodities, equities, and stocks. There are potential risks relating to investing and trading. You must be aware of such risks and familiarize yourself in regard to such risks and to seek independent advice relating thereto. You should not trade with money that you cannot afford to lose. The AutoChartist service and its content should not be construed as a solicitation to invest and/or trade. You should seek independent advice in this regard. Past performance is not indicative of future performance. No representation is being made that any results discussed within the service and its related media content will be achieved. All opinions, news, research, analysis, prices, and other information is provided as general market commentary and not as investment advice. AutoChartist MDIO software, their members, shareholders, employees, agents, representatives, and resellers do not warrant the completeness, accuracy, or timeliness of the information supplied and shall not be liable for any loss or damages, consequential or otherwise, which may arise from the use or reliance of AutoChartist service in its content. Okay, today we're going to talk about uniformity, and we have some slides in the PowerPoint, but the majority of the PowerPoint presentation, or this presentation, will be with live data this morning. And we're going to try to cover the uniformity and the trending pattern, uniformity and non-trending patterns, how uniformity works with clarity, and how uniformity indicator works with length. First of all, if you're familiar with the AutoChartist program, you'll know that when I switch to this live data, you'll see that in the indicator box we have quality indicators, and the first one is the overall quality. Second is initial trend, third is uniformity, fourth is clarity, and the fifth is breakout. Today's we're going to deal with uniformity, and if you click this I button on, you'll see that the definition pops up on the side, and it tells us that uniformity is even spacing of turning points that touch support and resistance lines. So what we're looking for is a pattern, basically, or we're dealing with the aesthetics of the pattern. We're dealing with an indicator that shows us a pattern that is aesthetically appealing. This is one of the sections of trading that deal with personal preference, because we all have in our mind what we want a triangle to look like or what we want a breakout to look like, and not everything is the same to all traders. So we do know, though, that if you work with these indicators long enough, that you'll begin to see a pattern that you can get comfortable with, and the more comfortable you become with that pattern, then the more confidence you'll have in trading that pattern. So that's why uniformity is important. Now, the first thing you want to know is that you can control uniformity through our new search pattern filter here. If you go to advanced search, for example, you can drop down the menu and find our uniformity indicator, and you can use the slide bar to set it at any level you want it to. The lower the slide bar is set, the pattern tends to look more like this, where the tops and bottoms aren't really tied together that much. But here, the higher you go on the scale, you'll see that there's some uniformity between the tops and bottoms. And that's what you're looking for, and that's what we're going to be working with today. Now, one thing that I've noticed by working with this over time and studying chart patterns for several years is that you want to see how these patterns behave with different types of markets. And if you've gone to, if you remember some of the webinars we've done in the past, we've had a a webinar where we've talked about trending and non-trending markets, and it's important that you realize that these uniformity indicators work differently with various markets. For example, when you're dealing with a trending pattern, which are like triangles and wedges, you want to see a clearly defined relationships between tops and tops and bottoms and bottoms. Okay, that's one main thing that you want to see. Also, you want to see a highly rated relationships between tops and bottoms. So this one search that I do each day is I take uniformity as my key element and I give it a 6+ rating, and I set it to trending markets, and in this case the FX majors. So just to go through those steps, I'll show you that I've selected FX majors as my group, and I named it just about covering all the elements that I've used to implement this search. If I drop down on advanced search, you'll see that I have selected a 6+ rating for uniformity, and I've come in here and I've selected trending patterns, which you've learned from other webinars, meaning channel patterns, wedge patterns, and flag patterns. You can see there's parallel lines. They tend to be the key indicator for identifying a trending pattern. Okay, now that I've done that search, you could see that in this particular example that came up this morning, the US dollar, Canadian dollar, you can see clearly defined tops to tops and bottoms to bottoms. This looks like a clear channel. And the reason why you want to have a clear channel is because in a channel formation you have distance between these support and resistance lines. So you want to see clearly defined swings in there. And when you do see that, then in your mind, again, that personal preference indicator is telling you that the market is trading in a channel, and this is what a channel should look like. So you can see it's clearly defined here. Okay, now if I go down to another pattern, New Zealand dollar, US dollar, this is a channel down pattern. Again, it's a trending pattern, and what we're looking for, we're hoping for to see that same relationship. Okay, give it a second here to come up with the data. In the meantime, I want you to notice also the intervals. Okay, the higher the interval, the clearer the pattern tends to be. The shorter interval, we covered this last week too, is that when you have short intervals like 15-minute charts, you tend to get a little bit more choppy because of the nature of the swings of that market. It's more of a reactive type market where traders are just moving a lot faster. But as the time periods increase, you start to see a little bit more conviction from traders, and that tends to smooth out moves. So again, here is a highly rated or 6+ uniformity rating, and we're looking for relationships between these tops, and you can see that it's clearly defined, almost like a sideways W pattern. So this is again a channel down pattern, and as I continue to go down and look at various patterns, I'll start to see that because of the high rating I've selected for uniformity, and because of the fact I've selected trending markets, I'm going to see these swings inside these channels and inside these wedges, which look aesthetically appealing. So that's one thing that you want to do is when you are trading, if you're a trending market, or if your personal preference is to trade trending markets, then definitely set your uniformity indicator to at least 6+ or higher, and you'll start to see these clear pictures. This is what it looks like in the FX majors. I can also control what I'm looking at by going into stock index futures also. So any market that I want to look at, I can control the uniformity, and I can control the types of charts I want to look at and experience throughout my trading sessions. Okay, now another thing that we should note is that non-trending patterns, which I've selected up here, this is Uniformity 6+ non-trending patterns for the FX majors. This is going to show me patterns that are non-trending, such as triangles and pennants. Okay, now they tend to trade sideways. Okay, you can see here, because of the convergence of the resistance and the support lines. That's what a triangle does. It starts out wide and then it compresses. And what this compression does is it basically telegraphs an area where you should expect higher volatility or a breakout. In other words, it's going to get so tight, eventually crossing, and it's going to basically tell you that we've compressed this thing enough, maybe because of news the market's been waiting for, maybe some kind of an event, but the triangle compresses the market, leading to the breakout. And what you want to note is that I've selected a high uniformity rating here, and again, you can see how easy it is to go through these filters. I've set my uniformity rating high at 6, and I'm looking for non-trending patterns, which are triangles and pennants. They all compress. Okay, now by doing that, you have to realize that you may not see the uniformity between the tops and the bottoms like you did in a channel, because with the channel you're going to have room from support and resistance to trade. When you have a triangle or a non-trending pattern, you get this sideways action. So in effect, what you're doing is you're searching for a good-looking sideways pattern, basically, when you're looking for a non-trending pattern. So you're not going to see tops and bottoms as clearly defined as you do in a channel. And as we move down, we could see in the euro, you could see again how that compression works. And it basically gives you an area that points towards a breakout. Now this one didn't break out to the downside, but it did switch directions and move back up. You could see that this activity starts to take place right when that apex is formed. Now we can also look at emerging markets, so you can see it a little bit clearer of how a market is getting ready to make a move. This is a triangle pattern that still needs to compress more, and it's a 240-minute, but it's set at high uniformity, and we're expecting the market to make a breakout soon in this. Again, here's another triangle pattern. Now in our yen, dollar-yen pattern, it looks a little bit volatile there. So again, this compression in here in the sideways action, that's what's giving you the high uniformity rating. It's not the big swings like we had in the channels, but actually the fact that it is compressing before it's moving. So those are the differences between a trending and a non-trending pattern that you want to have as much. You want that pattern to look precisely like what you believe a triangle should look like, or what you believe a channel should look like. So those are very key. Now we have a question coming up right now, and that first question has to do with the uniformity and the trending pattern. And let's take a look at that. When paired with trending patterns, okay, you see that question popping up? Okay, it looks like we've got a really good response there also, and almost a perfect score. Okay, that's good to know, because these markets do is you want to make sure that you want to make these searches or these filters work for you so that you don't have to do the work, and that's the benefit of using AutoChart, is that these patterns begin to come up. The other thing you want to note, and this is just a little sidetrack, you can see these orange dots coming up on the screen. These are alerts that there are new patterns taking place in these markets. So it has been a fairly active equity market.